And it's 10 a.m. right here in Lagos, Nigeria. Welcome to the second full week in December. Good morning, good evening. Wherever the world you're watching from, it's Business Morning live from Channels HQ. It's great to have you join us. Let's kick off now with markets now. Start with all markets. Oil prices rose more than 1% today as a key pipeline supplying the United States stayed short, while Russian President Vladimir Putin threatened to cut production in retaliation for Western price cap on its exports. Brent crude futures were up about 30 cents to $76.40 a barrel, while U.S. WTI intermediate crude was up at about $71.53 a barrel. That's a 5 cents added to its price. The price gains today for Brent and WTI followed declines in both grades last week to their lowest since December 2021, amid concerns that a potential global recession will impact oil demand. The 622,000 barrel per day Keystone line is a critical artery shipping heavy Canadian crude from Alberta to refiners in the U.S. Midwest and the Gulf Coast. We keep tracking that story to see how it impacts the oil market now. Back here, Nigeria's crude oil production rose to 1.185 million barrels per day in November 2022, representing the highest output by the country in the past 7 months. Latest oil production figures obtained from the Nigerian Upstream Petroleum Regulatory Commission show that the country's output increased by 171,119 barrels per day in November when compared to that which was recorded in the preceding month. Nigeria's oil production had been on a downtrend since 2021 following massive oil theft in the Niger Delta region, a development that denied Nigeria billions of dollars in revenue. International Petroleum Company Limited has raised the number of major oil marketers in Nigeria from 7 to 20 as part of measures to tackle the lingering fuel scarcity in the country. The decision to upgrade 20 oil companies and filling stations to the major oil marketers category was the first in over 25 years. Until this time of this decision, the only 7 major oil marketers in the country were Total Energies, OVH Energies, MRS, Cornell PLC at Dover, 1111 PLC, and NNPC Retail Limited. With the upgrade of the stations to major marketers status, the firms will now get products directly from the NNPC at regulated prices of 148 naira per litre. This also means that the stations would be mandated to sell products to consumers at regulated prices of between 170 to 190 naira per litre, depending on the location. Well, we got reaction from Moment there saying that they do not recognize these other companies. We'll keep tracking that story to see how it all ends now. So we'll take a break. When we come back, we know 2022 has been a turbulent year for investors in risk assets, but what's the strategy for 2023 to optimize returns? That's our next conversation. You stay with us. This is Business Morning. Well, now to our first conversation. Well, 2022, definitely a tough year for most investors, except you are in stable fiat, select commodities like oil, wheat, but risk assets got hammered this year from equities, Bitcoin, and all of them. Let's talk to Robert now, Motunde, Chief Investment Officer at Afrinvest Asset Management, to tell us more. Great to have you on the program.
Thank you, Ladi, for having me.
And I'm sure your clients must have seen this year as quite a tough one.
Absolutely.
We've seen risk assets, plummet.
Absolutely.
Once we saw Russia invade Ukraine, and we've seen inflation, sky high, at this time. Paint a picture of the global scene, and how it's impacted, the markets down here.
Yeah, thank you. So you see, this year, the biggest event has been that Russian attack of Ukraine. So we always talk about the February 24, which was a Thursday. Call it a Black Thursday, if you can. That was the day that the global macroeconomic dynamics changed for 2022. Don't forget that after the COVID of 2020, and most economies slip into recession, we saw recovery in 2021, right? So that recovery was supposed to continue into 2022. And even though inflation was surfacing at that point in time, because we're seeing some recovery in global oil prices. But what then happened on February 24th, that fateful day, Russia's first attack happened on Ukraine. And of course, what followed was, energy prices soared to a very significant extent. And then we saw the sanctions that came from, Europe and America, any developed country, with the exception of China, of course, India, that have some soft spot for Russia, right? The war is still ongoing, but what then happened was you saw major systemic central banks from US Fed to ECB to Bank of England, all of them pursuing an aggressive tightening course, which has now brought us to where we are today. Because US inflation got as high as 8.3, 8.4%. The last seen was probably, the last time it was at that level was probably 2 decades, before now.
We saw a lot of records broken.
Yeah. So, a lot of records were broken this year. And in addition, we've seen tightening move, got as high as the level that we are now. From as low as 0.25, we're comfortably touching the 4% levels in terms of tightening, and 2023 still promises to be some sort of, tightening, even though there's a slowdown at this point in time. So when we look at the global macroeconomy, which of course informs what happens in the market, that Russian event was a major game changer for the global economy this year. So this year we've seen volatility at its peak. Look at fixed income market. We've seen unprecedented low levels in terms of prices and high levels in terms of yields that were not even seen during the pandemic. In the pandemic, there were a lot of downgrades. The major concern on the pandemic was because there were restrictions, people could not go out, so the demand will be constrained. On the ground of demand being constrained, global oil prices fell significantly. And then what we saw was that, a lot of economies were downgraded by Fitch, Moody, and S&P. And the consequence of that was significant spikes in yields. But I dare say that in 2022, the low levels that were not experienced at the peak of the pandemic in 2020, we saw it this year. Absolutely. It's been an exciting year. Again, volatility has been so high. We've seen periods of ups that were significant, that investors took advantage of. And we've seen low levels. We are not still stable yet, but at least there is light at the end of the tunnel. And that's the investments, what informed our own investment strategy outlook. After we have dimensioned all of the issues, we have looked at the factors that have driven the market to where it is right now. We are now previewing 2023 and saying what are the likelihood of a respite. And we can see it already.
And looking at 2022,
yes.
Do we expect some kind of soft landing?
In 2023.
2022.
So we looked at soft or hard landing into 2023. And when we talk soft, what are the issues we're looking at? So this year, we've seen tightening, aggressive tightening, by the way, which is not just limited to developed economies alone. We've seen it even in emerging and frontier economies. Nigeria is not an exception. Today, we're talking about, our own NPR, at above 15% levels, right? Which was never seen since we've moved from MRR, which is minimum discount rate, to monetary policy rate, which is the anchor rate for the economy. This is the first time ever that the rate will be this high. So every economy has faced it, right? So the hard landing or the soft landing for 2023 will be that we are now moving towards a softer levels of headline inflation across major economies. Now, if that happens, you expect that the aggressive tightening will also, moderate. And if aggressive tightening moderates, what that suggests is already that the economies are about to begin to recover in terms of inflation. And we've seen that in the U.S. economy. The last inflation surprised. Market was expecting about 7.7 or so, or 7.9, and then we saw about 7.7, which was, quite exciting for the market, unlike what the market expected. So that's already suggests, and investors actually took advantage of that to trade the market more significantly. And what we saw was an unprecedented low level within the short space as well, which again, we've seen breather. We're expecting another another inflation figure for the US, say in the coming week, this week particularly. So, and once we see that, and we see another surprise level, it's a trigger for another major rally in the market.
And that also, will determine, the next meeting for the Fed.
Absolutely.
Are they going to go 50 or 75 basis points? We know the market is expecting 50.
Yeah.
But it seems there's also a chance of a
75 bips.
Yeah.
Yes. There's a chance of a 75 bips, but we think that where we are now, we think that the Fed should be a bit more assured that the tightening moves is working, and it's working in the sense that we are beginning to see inflation moderate. And if we see another surprise figure this week, it's most certain that a 50 bips is the more likely than a 75 bips as we look at the first Fed meeting in 2023.
And okay, so it's been a tough year, obviously, for 2022 for risk investors. We're going into 2023 now. What can we expect? How do investors, situate their portfolios, to make returns going into 2023? Because it's all about returns at the end of the day.
Absolutely. It's a tough one, right? Yes, but that's why that's the essence of research, which is what we have, taken our time to do. We've looked at the issues from, global commodity prices, geopolitics, trade issues, growth issues, which is a major concern right now, because one of the consequences of this tightening is the slow pace of economic activities that we are beginning to see. And that could carry us into 2023. In fact, there are some projections that suggest that the global economy may even slip into recession. We think that is unlikely, right? Because of course, major banks also, IMF, JP Morgan, Barclays, Citi, these are the major banks that, we tracked, are all also not projecting a recession. Though we also have some exceptions like the, Bank of America, BNP Paribas, all of those people that are also suggesting that there could be a weaker economic growth in 2023. But if you take all of those out and we look at the portfolio of investors as we go into 2023 across asset classes, you've seen that equities, for example, have also been hit this year with a lot of volatility, that a lot of investors have gotten their fingers burnt. So as we go into 2023, we think that the recovery is in sight. It's in sight because we will expect slower pace of tightening. Now, we may not see a complete reversal, right, of what is happening now. You may not see a Fed reducing rates in 2023, but the best we may likely see will be do nothing, keep the rates at the levels they are, right? And investors are already good with that. They are comfortable with that, knowing that, where you see US 10-year yield, for example, now, it's not even trading at the level of the, benchmark rates, trading below it, right? So that's already suggests that investors think that, Fed may have done enough from a monetary policy angle and looking into 2020. And because that was the major game changer for all asset classes this year. So we think that if there will be, a tempered, aggressive tightening in 2023, then it's positive for the overall economy. And that was what, shaped or formed our own strategy for 2023, when we say investors may have to tilt more towards fixed income. There should be a bias towards fixed income because we think that the yields are peaking and the likelihood of a, gradual reversal is also there for 2023. And, the way the market works, when fixed income yields are dropping, that's when asset prices are rising. So investors who are biased, who have a tilt of their portfolio towards fixed income are likely to benefit. And across board, not just for the US Treasury fixed income securities, but also for sub-Saharan African Eurobond. With the exception of the the sovereigns that are going through some fiscal challenges.
Yeah, like Ghana
right now, like Ghana, for example. Yes. Nigeria has been lucky. Yeah. It's not like we are any significantly better,
right.
But I think investors still prefer Nigeria, as a sovereign to invest in, and our reserves is the greatest positive that is working for Nigeria at this point in time.
At this point. All right, well, going into 2023, what asset classes do you think are ready to shine, come 2023?
We think that fixed income will take the lead, and that's why we say, we did a model portfolio of where our investors should, shape their portfolio, and we allocated 50% to fixed income across asset classes. So equities is taking about 15% of our allocation because we think that equities will also benefit. The next asset class that is also taking a significant chunk is real estate. We've allocated about 20% to real estate. So you're talking about a 50% to fixed income, a 20% to real estate, a 15% to equities. Then other asset classes, can take the remaining 15% from private equity. Cryptocurrency investors need to be very wary. We have a different view about the valuation. We approach cryptocurrency from a valuation point of view, and we say that, okay, for crypto, the greatest argument has been the use case, right? And we argue that there is no use case for BTC, for example, today that the USD cannot also do. So, basically, you can see them as substitutes, right? So to that extent, is there a justification for a valuation of, even at the level that is trading now, $18,000 above the USD, and for us, it's an argument that,
There's still the argument
it's a big argument.
Commodity or currency.
Exactly.
We're still trying to figure out what it is.
It's a big argument,
right.
What I'm saying now, if you have the crypto enthusiasts here right now, we will not end this conversation.
Of course, yeah.
So it's a big argument that we must know. But one thing that is clear is that volatility in that space is real. And then investors who are, sophisticated are the ones that are advised to play in that space right now for cryptocurrency, generally speaking.
Quite a diversified portfolio, and everyone needs to be armed.
Absolutely.
Every investor needs to be armed going into 2023 because the battle against inflation is still there and other economic headwinds. All right, thank you so much. That was Robert Omotunde, Chief Investment Officer, AfriInvest Management, giving us how to go into 2023. Thank you so much.
Yeah.
All right, we'll take a break now. We're looking at intangible creations of human intellect. That's intellectual property, as the federal government validates the draft National Intellectual Property Policy. That's our next conversation. Just stay with us. Welcome back. Still watching Business Morning live on Channels Television. Now to our next conversation. We'll be talking intellectual property. Recently, the federal government validated the draft National Intellectual Property Policy. Let's look more now into the economic benefits of implementation of this intellectual property policy. Join us now is Senator Ohaya, lead partner and head of IP practice and Fusion Lawyers. Join us right here in the studio. Great to have you.
Great to be here.
So it's a validation now. Tell us the content, of this policy and why it took so long, for it to get validated.
Thank you very much. Intellectual property is very critical, to the development of any nation. It's been some time that the Nigerian government has been considering the need to have an IP policy or strategy that would ensure that all of the key government agencies, including private sector, would be able to work together to leverage those benefits that a policy, provides. Last 2 years, the World Intellectual Property Organization, working very closely with some of the agencies in charge of intellectual property in Nigeria, decided that it was time to look at the situation really, what's going on in Nigeria regarding how IP owners are harnessing intellectual property rights for the purpose of exploiting it to make, to create a better economy for Nigeria. That situation analysis was done between January 2020 and 2021. And by the time the situation analysis came up, it was very clear that Nigeria lacked certain legal frameworks, certain institutional frameworks as well, enforcement frameworks that would have ensured that as our creative industry, the entertainment sector, the sports sector, and all of them are growing, Nigeria would have been able to benefit a whole lot from there commercially. So this is how it's been. And I can tell you that the National Intellectual Property Policy and Strategy is not just a policy document, it is also a strategy document, which means that Nigeria is very serious about implementing the policies, so it doesn't remain a paper thing.
And looking at the content at this time, do you think anything is lacking, or any recommendations to make it better?
All right, in terms of the contents and what could be better, for now, what we have captured are about 9 strategies, or 7 strategies, and about 9 policy objectives. I can say that it's pretty comprehensive. We have one that has taken care of legal framework, which will ensure that if you are an intellectual property rights owner, you now have the legal framework that can back that protection, so that you can also enforce and make sure that you maximize the labor you've put into creating these intellectual properties. Secondly, institutional framework as well. For the first time, Nigeria is going to be having what is called the Nigerian Industrial Property Commission, which means that we will now have a commission that is specifically in charge of administering and managing intellectual property rights in the country. I also see gaps that has been closed up now around how we're to ensure there's effective or adequate IP education and awareness out there. Because if you ask me, many people create IP in Nigeria, but they don't even know it. They don't even understand that this is a form of property that they can maximize to make some money. So in terms of what could come in, I would say it would be, I think that the policy is looking at the current situation of things, what Nigeria has lacked over the years, and trying to close the gaps. But I also think, especially when looking at new and emerging technologies, I think that the IP policy may have sort of de-emphasized that area. What I see happening in the next 5, 10 years is that emerging technologies will disrupt the IP space. So in terms of how you manage IP or how you are able to enforce IP rights, those things are going to change. For instance, blockchain, which has application in NFTs, will disrupt that area. So I would have thought that the policy would be a bit futuristic as well, to see how these emerging technologies could be accommodated as well from 3 areas of 3 perspectives. 1, in terms of protection of IP. 2, in terms of enforcing IP. And 3, in terms of managing IP as well. And one thing I know for sure is that IP rights owners need to be able to trace their IP so they can get their royalties from these IPs. I see emerging technologies changing that.
Well, we'll keep watching out, for that, because at the end of the day, we've seen, instances where, you create some intellectual, property, but you're not able to, reap the benefits of it. And one interesting one, I've seen is on social media, you have some of these, skit makers. They use a couple of voiceovers, real people voices. True. I'm wondering, is there any claim, do you think there'll be any claim at some point?
Well, it's interesting. IP is very dynamic, right? For those who may not even understand what IP encompasses, people like to say that IP is the creation of the human mind. And the human mind is a very wide one. But in terms of the scope of protection, in terms of the scope of enforcement, what are those IP rights that you can even enforce, in a country? You will have things around, you hear about copyrights, which are rights a creator has over an original work, which could be a creative work, a literary work, a musical work, an artistic work, a sculpture, all of those stuff. You're going to have to ensure that you have original rights to these things. We look at trademarks, for instance. Nigeria is a fascinating country. where we see a lot of people enterprising, young people throwing stuff out there. If you look at whether they have been able to harness IP, I would say maybe not. Startups these days are opening shop in Nigeria, in Delaware, everywhere in the world. How are they maximizing IP? You talk about trademarks. From the statistics we have, we are not maximizing that enough. And it's even worse for patents, really. When you talk about patents, you're looking at inventions. In the country, so far, most patents that have been granted by the Nigerian governments were granted to foreigners, over 90% of them, meaning that two things. We may not have enough local inventors, or our local inventors do not believe in the patent system in the country. And so they go to other countries like the US, where they feel that their rights are better protected. So you talk about these kits and all of that. It's a big thing these days. And what is sure is that we're going to be seeing an increasing rate of piracy, an increasing rate of copyright infringements. This is one key thing that has happened over the years since the introduction of the internet. You know, people say that the internet is a hotbed for copyright infringement. So I would say, yes, there will be rights to some of these kits if they are original. Remember that the Nigeria Copyright Act, recognizes only work that is original. So if you take someone else's work by virtue of finding a skit on YouTube and you put it out there in your name, that is not protected. You can't enforce that. The original owner has the right to come get you and enforce that in a court of law. So you want to be sure that when you're creating these kits, they are original. They have to be original. It's the
even the voiceovers used,
yes,
within.
Yes, it has to be original. Originality is what is really essential when it comes to copyright enforcement. Originality, and of course, what you call have you been able to expend sufficient efforts to create it? So someone went in there, did a skit after putting so much labor and resources. That's sufficient efforts, and that's what is needed. When you combine that as well as originality and then fixation, what we call fixation is when we say IP is a creation of the human mind, but it can't remain in the mind to be enforced or protected. It has to be expressed in whether a written form, in a video. So that's fixation. So it's either you save it on a CD, you put it on the internet, you put it in a notebook, that's fixation. So when you create work, you have to be sure that these three things are there: originality, fixation, and sufficient effort.
All right, looking at the policy now, what industries other than entertainment, do you see benefiting from the implementation?
The manufacturing industry in the country. Currently, the manufacturing industry, I would say maybe they're not producing enough. I see the manufacturing industry needing, I see them benefiting from an improved patent system in the country. People need to trust our patent system. For inventors I've met in the course of my work, they usually have a lack of faith in the Nigerian patent system. They think that if they disclose what their invention is all about, they think that they might lose it because we don't have trusted system. That's the opinion. Secondly, trademarks. I do not see Nigerian manufacturers exploiting trademarks enough. So what that has led to is that we are pretty big when it comes to the trades and all that. I mean, we have $500 billion or so in GDP, but it's more of trade, commodities. We need to move beyond that. Because if you look at some of the biggest companies in the world today, from Apple to Google and the rest of them, it's all about branding. It's all about that sense of the core culture. I don't see that a lot in many of our businesses here. So many of our businesses or manufacturers are in the business of trade, buy and sell. So they are buying commodity, which is pretty cheap, right? But others have moved away from there to use trademarks to create a brand character and then be able to say, I'm selling a brand. So if you say you're selling milk and I'm selling milk, that's commodity. But if I say I'm selling health, or I'm selling comfort or something, or I'm selling just something bigger, trademarks can do that stuff. So Apple today will tell you, we don't sell phones, we sell prestige.
Exactly.
Right? So those kind of stuff.
All right, well, let's see. I'm sure I have other things that I would have to patent. Sometimes I can look through and see all my creations. Well, thank you so much, Senator Ihea, lead partner, head practice at Infusion Lawyers. It was great having your perspective. Thank you so much.
You're welcome.
All right, that was Senator Ihea there giving us the details there for the draft policy, talking about the policy coming up for the intellectual property market right now. So we'll be moving on to another discussion now. We're looking at what's happening in the markets. And we have Anete now coming in to give us more information there. Anete, it's a fresh, brand new week, the second full week of this month. Yeah. And obviously it's been a good outing
yes,
for the past few weeks in the market.
Yes, it is, particularly looking at it's almost the middle of December, and of course, how many days to the end of the year. So far, we have about, it's actually about 4 markets I should be reviewing, but after that 4 markets, 1 market ended in the red, which was the unlisted securities market. So, and that's because lots of profit taking, there was a deep position, there was more profit taking on the side of investors in that market. And surprisingly, that market has not really been doing too well in the last couple of months.
Right. Interesting. Well, we'll keep watching that market.
Exactly.
Say next Saturday we'll have discussions about that market. Yeah. But let's see what's happening in other ones now.
Okay. All right. So with that being said, now we move first to the forex market. At the FMDQ exchange, in terms of the forex market transactions, the total turnover of transactions carried out there, it weakened as at last week, November, the last week of December, first week of December. So this is how it turned out: 16.29% decline on the market, and the total value carried out there for that segment was $776.39 million, in contrast to what you had as at the previous week before the markets closed last week. So, but when you take a look at this board here, the FX markets, the false market of the FX market, it had quite an impressive week-on-week change, 295.35% increase. And then for the FX spot market, it was up by 21.15%, which you can see there. But cumulative, this is how it turned out. Now let's move over to the Nigeria Autonomous Foreign Exchange Fixing Rate, what you call the NAFEX rate. The Naira against the dollar, it weakened by 0.05%. And this is what it stood as at last week, Friday, 444 Naira 63 kobo against the dollar, in contrast to what you had the previous week for that market. And of course, I will be giving you more details about the fixed income market, the bonds, the treasury bills, as well as the what to expect from today and the rest of the week. But to give us more insight into that, let's talk to Bosun Obembe, fixed income dealer at Access Bank, to tell us more about that market, what to expect this week, and also a review of last week. Thank you for joining us, Bosun.
Morning. Thank you for having me, Anete.
Okay. So by my radar, I can see that we're having a FGM bond auction, which is going to be conducted today. And then, of course, we will be having an OMO auction as well as Forex market auction. But when you take a look at the market last week across the bonds and the fixed income market, it was all bullish sentiment. And, of course, last week, the central bank had carried out some activities. So can you tell us more about that activity and what to expect this week?
Okay, just like you mentioned, last week the market opened on a bullish note, and like we know, the market is driven by liquidity. So there were lots of liquidity in the market opening the week. However, on Wednesday, when we had the NTB auction, that was an unusual CRR maintenance that happened in the system that took away most of this liquidity. And at the auction as well, due to the liquidity in the system, so we saw a lot of participants coming to the market to actually to bid at that auction. As a result of that, the stop rate at the market at that auction declined on the long end to 13.05. So on Friday as well, there was another FS auction by the CBN, which we expect about 200 billion will have been taken out from the system on Friday. So the liquidity, the bullish trend that we saw last week is no longer there. So the market is quite tight now. And this week, there's another auction, like you mentioned. We have a bond auction today. We have a 75 billion each on 2029, 2032, and 37. At this auction, we expect the rate on the 2037 to that remain the same or decline slightly because we have a lot of market participants that are actually trying to cover their short position on the paper at today's auction.
Okay, so Bosun, 2 days from now, which to be precise, the 15th of 2 days from now, so we will be expecting the November inflation report from the National Bureau of Statistics to be released. So now, do you see that having any impact on the market? And then at the same time, we see, do you anticipate any increase in treasury bills yield from the current level that they are in the midst of a tight liquidity in the system?
Okay, so for this week auction, the NTB auction, I don't expect the rate to increase. I expect the rate to further decline, maybe to 13% or maybe 12% level because of the volume on offer. Like on the inflation, the market has already priced that in. The impact will be seen maybe in today's bond auction, where I don't expect the rate to increase. And for this week, nothing is really happening this way except for the bond auction today and Wednesday another NTB auction. And given the volume on offer, which is just 13 billion, and at last week auction, the DMO sold 50 billion more than amount on the offer. So I don't expect them to increase rate at this auction. Probably by the next auction or maybe next year, we'll see the rate trending up again, in line with the CBN objective of narrowing the gap between the real return.
Okay. All right. Thank you so much, Bosun. And while our attention is always fixed on the markets, and we will continue to see the activity as they move. So that was Bosun Obembe, fixed income dealer at Access Bank. So, Ladi, I would have told you about the market, but in a brief, the market gained 395 billion in just 4 days, 4 trading days last week for the first full trading week of December. Of course, we're still expecting bullish sentiment to continue this week.
This week. All right. We'll be looking out for that. Thank you so much. That was Anita there giving us the details there in the equities market and the fixed income market. Well, we'll take a break now. When we come back, we head to the UK. That's in a moment. Do stay with us. Welcome back. Let's head on now to London. We have Juliana standing by right there this time via Zoom. Great to have you, Juliana, and a happy new week. And we're seeing the UK economy return to growth in October, according to early official figures. But there's a suggestion this could be the last to show, going forward.
That's absolutely right. Good morning, Laddie, from a very snowy London. I don't know if you can see the white behind me. It's been snowing heavily overnight, and we have had some pretty decent data this morning from the Office for National Statistics, which revealed that the UK actually returned to growth in October by 0.5%. This follows 2 consecutive months of decline. I think economists really are being cautiously optimistic with this data. The Office for Budget Responsibility, which is an independent watchdog looking at forensic data, has already forecast that they think the UK is already in a recession, and this is likely to be the longest recession since the financial crisis of 2008. There are a couple of specific things which we think have kind of uplifted October's economic output, one of them being that in September, if you remember, we had an additional bank holiday because of the Queen's state funeral. According to economists, that kind of knocked off about 0.3% from GDP, which is why we have seen so much in October. And then, of course, manufacturing and construction have been doing pretty well. We saw more people going to frontline services, so GPs with the autumn booster jab did pretty well too. But we have had a response from the Chancellor, Jeremy Hunt, again being cautiously optimistic, pretty pleased with himself because of this data, but warning consumers that the triple lock headwinds, which is the persistent COVID-19 pandemic struggles, Putin's illegal war in Ukraine, and of course, high gas prices are likely to show a slowdown in months to come.
But I'll take that. That is a positive we're getting this week, even though it's still cautious optimism. But what are the other economic data we're expecting this week?
It's going to be a pretty busy week for us in London, Laddie. First of all, tomorrow we're going to be looking at the labour market. We know the labour market is tight. Anybody in London that walks around anywhere, you'll see that people are desperately looking for vacancies. So we're going to be having that on Tuesday. On Wednesday, really important, we're going to be looking at inflation data for the month of October. And now in the previous month, it was at 11.1%. This is the highest rate of inflation we've had since October 1981. Really, really difficult for people at the moment, which is why we're seeing across all sectors people striking, demanding higher wages to keep up with inflation. And then on Thursday, the all-important one, the Bank of England Monetary Policy Committee will gather at Threadneedle Street to decide on interest rates. Interest rates are going higher to push down inflation, but of course, it means it's going to cost more to borrow, which is more headache and heartache for the millions of mortgage owners who are already struggling at the moment. Interest rates currently at 3%. Rose 0.75% at the last gathering. I think we're expecting it to be slightly lower at about 0.5%. But we shall have to wait and see. It's only Monday, Laddie.
Yeah, it's only Monday. We'll be looking out for all of that data and how it impacts the market. Thank you so much. That was Juliana giving us the details from the UK. Thank you, Juliana. And I trust you stay warm out there. All right, let's move on to other markets now. Let's see what's happening in the crypto space. We see Bitcoin there trying to clear that 17,000 resistance zone, but couldn't stay there. Looking at the fear greed index at 27 points, better than extreme fear. It's just fear we're having to start the week this Monday. Let's look at the market cap today. Market cap $841.26 billion. That's down 1.86% this morning. We're seeing quite a slow morning for the crypto market today. Volume traded up 26.02%, and we'll see Bitcoin dominance at 38.74%. Let's look at the price of Bitcoin this morning, $16,935. Did lose that 17,000 level there, down 1.40%. And we're seeing volume, $17.14 billion. That's volume traded in Bitcoin. Let's bring in Olumide Additional now, financial market analyst, to bring us up to speed. Great to have you, Olumide. Good morning.
Yeah, thanks for having me, Laddie.
Yeah, and happy Monday. And there's news now, maybe the bottom might be in for this market. We see former BitMEX CEO is thinking the Bitcoin price could have reached the bottom after most of the irresponsible entities, as according to him, have all run out of Bitcoin to sell. What do you think?
Well, data doesn't look like gotten to a bottom yet. If you recall, on the NFT space, we've seen trading volumes at a yearly low, and that's periodically because the appetite for digital collectibles have dampened with the FTX collapse. Also, you also need to recall that there are record outflows from the fast evolving financial market, and that's crypto assets, based on the fact that the US Fed might likely be more hawkish than anticipated. And that's why you've seen Bitcoin being at the range bound position between $16,800 to $17,000. Well, it's been a very tricky year. $350 billion lost by retail traders in the world's biggest economy. The crypto market was included. And that just tells you how tough it is for you to bet on risky assets when US Fed keeps accelerating interest rates. But having said that, next year, we're seeing that the likes of Goldman Sachs are taking position in credible crypto companies. They see that there are still upsides in the blockchain technology. You see CBDC coming to play. Back home in Nigeria, you see that the CBN is trying to bring in INAIRA with the cash withdrawal limits. So that will bring some positivity for crypto developers, despite their concerns that it has different functionality with Bitcoin. But if you look at the parameters of what it governs, you will see the technology has an underlying relationship with the blockchain.
All right, we'll watch if CBDCs will take the shine next year in Nigeria. Thank you so much. That was Olumide Adesina, financial market analyst. Thank you, Olumide.
Yeah, thank you.
All right, look at the top five gainers. We see TAN topping the counter up 7.65%. We see STX also there. GMX and ApeCoin up 1.22%. So we're seeing a quiet morning on the gainers counter. Flip over to the losers counter there. We see coins like Doge there. Doge, the king of the meme coins, topping that counter down about 10% there. It's 8 cents. Flow, 9.60% down. We see Chile's there. This one should be shining in the World Cup, but doesn't seem to be. It's down 9.05%. All right, that's it for the markets today, and that's a wrap on the program. Don't forget to join us at 1:30 on Business Incorporated for more updates and developments in the world of business. Remember, you can watch this again on our YouTube channel. Just flip over to YouTube, search for Channels Television, and you can watch all our productions. Thank you for watching. I'm Ladi Williams. Bye for now.